want to lead it? I mean, you guys can lead it. You can make fun of me if you want.
No.
Let's move ahead to the next slide. No, go ahead. Come on. We're not going to do this for 2 weeks. You guys lead it. Ask me questions.
No.
Rip me up.
All good. All good.
Try the first line. Go ahead. Try it. Let's try it.
Big hugs. Big hugs.
Last week was the biggest ever for equity index option volume.
Apparently, yeah. And apparently no 10 and 11th were like the 4th and 5th largest of all time, apparently.
Really?
Yeah.
I didn't feel like that.
Well, no, 10 was big, though. I think a lot of it has to do with Thursday and Friday.
Okay.
That was good. That was fun. See?
Yep.
I'm going to do another one. There's only 4.
On the belly, on the week, belly of treasury, that's not even English. On the week, belly of treasury curve is flat. Short end is dramatically higher in yield. Long end, lower.
It's not supposed to be a complete sentence. It's like his notes so that he could talk about it.
Oh, okay. Then I'll change it.
Why is this the first time I'm doing this? Go ahead. This is great.
The PPI had a similar effect on the market as the CPI. I don't even know what this means. You better do this.
Are we past peak inflation? It's a question. Are we past peak inflation? Yes or no?
Oh, God, yeah. We passed peak inflation 2 months ago.
Oh, okay. The next one should be easy. I know you know a lot about the VIX.
The VIX, with the longest losing streak since June, is not forecasting much fear. That is absolutely true. There is no fear out there at all.
Doesn't seem like it, right? Yeah. All right.
Yeah.
Let's move ahead. I'll do the charts.
Thank God.
This is a chart of the percentage of SPX up days between 2 and 3%. Check it out, man. I thought this was pretty interesting. As you can see, this is the most in the past 50 years. So we have about 21% of up days between 2 and 3% compared to, look at some of these years, 09, 02, 87, 74. Most of those were somewhere between 10 and 14%. This one's 21. Would you obviously agree with it. It's been happening, but it's kind of crazy, right? Like it puts some context around some of our up days that we've had.
I would have had no idea of that statistic. Zero.
Me neither. But
and that 2%, and that 2% is coming from a high number, right? I mean, it's not, it's not a $10 stock anymore. You know what I mean? It's 10,000. Yeah.
Yeah. Right. Let's move ahead to the next slide. Number of tech employees let go, man. Look at this chart. So obviously this is going back to December of last year, but it also shows probably some of the bigger names that have let people go during these months. That better.com, remember that one? That's the company. It's one of those online it's like Open Door and however you describe those. It's like Open Door and those type of companies, the ones that have bought properties and they were trying to, flip them and sell them. Better.com was the one where the guy fired I don't know how many people, but in December of last year, we fired them all on Zoom. Remember that? It was a big deal. They had, a lot of attrition in the first couple of months of the year. You got May where it really kicked off, 22,707. The big ones then were Getter and Carvana. You got July where we had Tesla start to lay off and Coinbase and IBM. The list goes on, but there's been obviously a lot of tech layoffs. Oh, ignore what I got on the right there. I screwed that up. But a lot of tech layoffs that we've seen over the last couple of months. And, this is the proof.
Crazy. Wow.
Yeah, it is kind of crazy. And then there was a lot. You don't know about this, Tom, but see, Tony and I are on Twitter a lot. And so last night there was a lot of talk about what was going on with Twitter. A lot of people, basically he's telling them, get the hell out if you don't want to be here. And there was a lot of discussion. It was like hashtag RIP Twitter. And a lot of people were just talking about all the tech people that are leaving just because they don't feel like dealing with the BS, I guess. But a lot going on in tech. A lot going on in tech.
More good developers for firms like us.
Exactly. That's the way I see it.
As long as co-hosts don't start quitting, we'll be fine, Jamal.
Let's move ahead to the next slide.
Tom's definitely not making any new friends, so you don't have to worry about that.
Well, that's true. This is a chart of implied volatility premium for options. So basically, this is the difference between implied volatility and the VIX, and showing you how much how things have gotten bid up for each one of these CPI events more recently. So starting in May, and then the last two, of course, you can see where they were really bid up. So traders clearly have been buying protection ahead of these CPI days for the moves that they've been expecting, and obviously we've seen a lot of them been fairly elevated. But just showing you ball points change heading into CPI events for SPX. Follow me?
I got it.
Does that make sense? I'm just kidding. Yeah. Let's move ahead to the next slide. I was just kidding. You didn't have to answer that. I was making fun of our friends. I love her. You know what I mean? This right here is showing what's going on with earnings. So when earnings have beat, they've been rewarded this time around. When you look over the last 5 years of quarters, look at the most recent time where, on average, if a name is beat on earnings, it's been up around 2.4%. This picture is also coupled with the next slide we'll get to in a second. But basically, when earnings have beat, they've been up on average about 2.4%. And that's comparing to a 5-year average of 0.9%. So when they beat, they've gotten rewarded handsomely. You know what I'm saying? On the flip side, if we move ahead to the next slide, when they've missed, they have been crushed on average of 3.5% to the downside that the stocks have moved versus a 5-year average of 2.2%. Basically to say these names have been moving a lot on earnings, beat and misses. And obviously this is just averages. But when you compare that to, say, for example, 2 quarters ago, Q1, you can see on average names were down 5% on a miss. And we saw big misses and names that were moving strongly. So basically names have really reacted to earnings that we've seen this quarter versus other quarters in the past.
It seems to me that the
move back one for a second, Ryan. Go ahead, Tom.
It seems to me that part of that is the heightened implied volatility.
Yeah, I would think so too.
Yeah. I mean, I just think that everything's moving more right now because vol is 25 as opposed to, 17 or 18.
17, sure.
Right. So when you look at the difference between, what's been happening for the last, 20 years, and you look at what's happening now, it's more, I think it's more of just, the heightened volatility. It's having its impact.
I think you're absolutely right, because people have to remember when we came into this earnings season, God, it's been 3 weeks already, or 3 weeks. VIX was probably 27, 28 at the time. And now it's kind of calmed down. But again, that was coming into it. VIX was a little elevated, and names have followed suit as far as these moves. Okay, we can move ahead. Yeah, move ahead one more. Ignore the first bullet point, but this is basically the forward curve of the SPX. The first bullet point is a little off. I mean, obviously, today's options aren't a 45. It's just, front month options with the expiration, essentially. But when you look at the rest of the forward curve, it's somewhere between 23 and 25. It's pretty flat going out for the rest of the year. There's no major events being expected. I pointed out the December 13th CPI. You can see the difference between the day before and the day after. As you can see that one's lower, and obviously there's the jump for the day after. That includes the CPI move. But other than that, it's pretty flat. So, which we already know. I mean, things are kind of that's where we get the whole title from. Smooth sailing from here. Maybe it is. Things are pretty calm. It looks like at least that's what forward volatility is telling us for SPY. I don't think there's any major events outside of the CPI thing.
No, I mean, listen, most of the stuff is, we've had all the Fed stuff. We've had the midterm elections. We've had the war. I mean, what else is out there that's known? Nothing.
It's the end of the year as we know it.
It really is. It's been a hell of a year too.
There's a song called,
one thing I do know is that we're never going to have a Sosnoff bingo with you saying the Fed. That is not on the sheet. I think we're safe. So
I don't ever talk Fed.
I know this is not on the bingo sheet. I'm pretty sure of it. Let's move ahead to the last slide.
No, I would never mention the
Fed. Besides when you just did. Besides that, yeah, you would.
Fair.
SPX has gone 5 consecutive sessions without closing either 1% higher or lower for the first time since Jan. I didn't know that until last night. We'll see what ends up happening today, but it could be 6. Dollars down for the 5th week in a row. That's the first time since August of 2020, believe it or not. And there's been kind of a huge disparity in the economic data recently that I loosely pay attention to. I mean, retail sales was good comparably. Like, people are actually seemingly spending money. We've seen the jobs reports. They really haven't had this big fall off yet. Housing obviously is looking pretty dismal because interest rates are so high, and doesn't seem like actually I think there's a housing thing this morning. I didn't even pay attention to it, but I think that's showing some mixed data in there. But obviously housing isn't really doing a whole lot. So those have been getting crushed by a lot of the interest rate stuff, and consumer credit. People are using credit like crazy. So that's picked up since these rates have gone up. So there's all these things that we're paying attention to because rates are rising. And I think it's given this mixed picture. It's interesting, though, to see it all really affect markets for, I mean, well, not markets, but just economy for those who haven't noticed that type of thing before. Finally, the market measure on practically applying beta weighting, looking at beta weighted deltas. Check that out. It's pretty cool.
Yeah, that was a good one.
Very good, my friend. Thank you for your time. We're going to take a quick 90-second break. We'll come back. We got the opening bell next. Let's take Trade Live. Thanks, Jamal.